What's going on, traders? Welcome to the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we always look at our core watch list here. And this week, the Discord members did vote on a new set of tickers. We had over 50 submissions, but these are the 10 most popular. If you want to vote for next week's video, feel free to join the Discord, which is linked down below in the description with all of our other free resources. That being said, a lot to talk about, new all-time highs in the market. Let's get into it. So in the SPY weekly chart, we always talk about candle structure and location first, and then we'll talk about some more nuance. So our structure is a pretty solid green-bodied candle with a smaller lower wick. And what this is telling us is that as sellers tried to push it into last week's range, the buyers said no way and actually closed it up at the highs of the week, which most importantly, of course, is all-time highs. So blue sky territories up here. Very, very bullish thing. The next thing we talk about is location, and of course we have overlapping value, so this week's range overlapped last week's range, which I think is a good thing for the market, a bullish thing. What it's telling us is, of course, that we're defending last week's at least 50% mark of that range, but more importantly, the market isn't getting too far ahead of itself at one time. You know, if this was a bar that went crazy, something like this, then of course you always risk the fact that the market is getting too far ahead of itself, but no, this is a completely manageable range here as we start to break out of a 3-week balance. So as we mentioned balances, we talked about this a lot in the midweek market update. We have a longer term balance here, right? And this means that a lot of energy is building up in this area of the chart. And then we put in, let me use this tool. We put in another 3-week balance on top of that. So there's a lot of energy built up and sort of pent up, more importantly, in this marketplace. And I think it's time that the market sees a little bit of excess to the upside, specifically as we break out of this range. Excess would look like this. So in the past, we had balance, right? Areas of sideways consolidation, and then you see excess after it. So I'm not saying it has to do the same thing and just chug, chug, chug to the upside, but based on everything we're looking at, I think that is a likely scenario. We have a little bit of a weekly bull flag, something that looks like this, and as we head into blue sky territories, we can use that to sort of forecast where prices might be headed. If I draw in some Fibonacci extensions going from the low to the high of this move and then to the pullback low, what you'll notice is if it's a true weekly bull flag breakout, we could be seeing somewhere up around 390 as a full, upside target. Now, does it have to do it this week, the week after, or even the week after that? No, absolutely not. It always could just drift sort of sideways, take its time, and then make its way up there. But 390, that's a substantial move, and I think that could be on the horizon if, again, this is a true weekly bull flag breakout. There's a lot of energy built up in this general area of the chart, as we talked about with balance. Let's go ahead and cover some daily levels. So on the daily time frame, in terms of upside levels, we're just going to have to play it as whole and half dollars, as well as any intraday levels here that form. Those are our blue sky levels, and we don't really have anything to go off of other than that. To the downside, though, we have some key areas of intraday support and resistance. We'll get rid of this one. It's not as important. But if we fail back down below this 367, I would be looking out for a potential gap fill here to 363.11. Now, why is this gap so important? Well, when we gapped up on Tuesday morning, we failed to really fill that gap on the first day. We tried again on the second day, got a little bit more of it filled, but there were no sellers to be seen, and the market obviously moved much higher after that. The rest is history. So what is this telling us about who's controlling the marketplace? Who's in the marketplace to begin with? Well, there are certainly no sellers because we know there should have been very little support in this general area all the way back down to Monday's sort of high there. So they should have been able to take it back down, no problem, but there were no sellers to be seen. So the bulls took control and boom, off to the races it was. And I think they're still in control as seen by this nice green bar here on Friday's action. Clean green continuation bar to the upside. In terms of supports below, if we start to see any sort of pullbacks, I would want to make your attention to this support trend line, something that looks like this, right? If we see any sort of pullbacks into this area, maybe we even repair this structure, right? Fill that gap. I would be watching to be a buyer around these levels. If we start to see hammer candles print, definitely a buyer looking for a retest of at least here, if not the all-time high and potentially higher after that. To the downside though, if it fails, let's talk about some lines in the sand that we don't want to see violated. We mentioned that this is sort of our 3-week balance on the weekly time frame, and the line in the sand here is definitely 352. We've mentioned this in the past as well, because what happens if we break out here and see a failure back down into this range is that we should see a move all the way back down to the bottom end of the balance range, which is at 352. And if that breaks, well, the rest is history. We know we could potentially move much lower, and there is some gaps underneath us that could potentially be filled. So 352, you definitely don't want to see that being violated. But as we've talked about, as everything stacks up that we've mentioned so far, do you think that's a likely scenario? I certainly don't, at least for this upcoming week of trade. We'll have to reassess, reanalyze what happens after this week, and go from there into the future. So the cues are similar, but different in the sense that if we think about what the cues are made up of, which is all of our tech companies, a lot of tech, as we've talked about in prior weekly watch lists, are just going sideways in a larger range, right? They really haven't moved out of this sort of area of this overall, larger consolidation that we've been in. So why is it that the Qs are sitting up here at all-time highs? Well, there's a few reasons, I think. I think Tesla is a main culprit, but let's just break down some levels and what's actually happening here. We did fill our gap from Tuesday on Wednesday, so $300 is a nice repaired, psychological number, where if we did see any pullbacks, again, that would be an area I would look to become a buyer if this uptrend remains intact. Our trend line here is extremely steep, something like this, right? And if we get that pullback, at least early on in the week, I'd be looking to be a buyer at super support around 300, heading into all-time highs, essentially over that 305. This really isn't the proper way to end an auction. If we zoom in here, you'll notice we have all of these touches in very similar proximity to one another. That would be the market. If this truly was the top, that's the incorrect way to end an auction. Generally, you want to see the market end on a bang, so a big, huge, upper wick, large green continuation candle to the upside that's immediately taken away by some red candle. So I don't think that this is necessarily a top, and I do think that the Qs want to head higher just based on that, but we do have some levels to be watching out for as buyers. I think 300 is the first one. Anything underneath, if we hold on to sort of the top end of this set of highs in here, the 293.41, I think that could be a reasonable pullback as well. Anything underneath, and I think the sentiment shifts as we start to get into that 50 SMA here on the daily time frame. But again, based on everything we've talked about so far, I do think the market wants to go at least a little bit higher into the holidays. I mentioned that in the midweek updates as well. Blue sky territories above, we sort of talked about 300, and then the 293. Anything under that, then I would just really be watching out for that 50 SMA here on the Qs. Last but not least, checking in on IWM Russell 2000 and our small caps, and what's been happening here for the last 3, 4, 5 weeks, really. We are seeing nothing more than balance, and then a little bit of excess, and then a new area of balance, and then a little bit of excess, and then another area of balance. And what did we see on Friday? Excess to the upside. So nice move there out of a balance area over a pressure cooker top at 184.36. Anything higher than this, of course, is just blue sky territories, whole and half dollars, intraday levels that do form. To the downside, if this one pulls back, I definitely want to see it hold this general area of the chart right here, this prior area of balance. If we fail lower, I do think this gap would easily fill, and then maybe potentially fail back into this overall range, which is this one right here, where we could see some more chop. So overall, the momentum here is still clearly to the upside with these balance areas that are just holding perfectly sideways, right? We're not seeing any sort of major pullbacks. We get a move up and then we go sideways. It would be a much different story if the market pulled back here and did something like that. That would not be as bullish, but instead IWM just continues to hold strong, go sideways, and then boom, continue to see this excess. So I'm just continue to do what works until it doesn't work. And what's working here on IWM is waiting for some balance and then boom, sort of getting the breakout above those highs. So that's what I'm watching for here as we continue to head into blue sky territories. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So moving right into Apple here, and this is sort of what I meant with the Qs being at all-time highs, but most major tech is actually sitting at, right around 50%, if you will, of this range. You'll notice Apple is right there, in the 50% mark. So that being said, why are the Qs so high? We'll talk about that when we get to Netflix, but for now on Apple, what we're seeing is a daily bull flag start to form something like this. We also just got a key break of a notable resistance trend line that was there. So as we've broken that, we are seeing a little bit of pullback here into the last 2 trading days of the week, but we're forming some lower wicks, some hammers there, which, indicate that the buyers are stepping up and keeping prices off of the lows of the session. I think if we can hold this 121.07, the clear move is to retest these highs in here, and if that breaks, we have the 128.76 just above here. So I'd be on the lookout for that if we can take out maybe the highs here at 123.50. Those are the upside targets. If we fail back down below that 121 though, definitely back to the 119 mark. That was a clear area of resistance there, super resistance on, I think that was Monday, right? Which was a great trade if you took that one. We talked about it in last week's episode. Anything underneath and a failure back inside of this range, I'd just be looking out for that 50 SMA here, which is hanging out right around 117. And we'll just cover one more to the downside for you. That's at 112.32, but that's asking for almost a full-fledged reversal out of this bull flag. I don't think that's the likely scenario. Again, with this thing consolidating nicely sideways up here, a couple of hammers there on Thursday and Friday, I think upside is likely if we hang on to the 121. So Netflix, again, making up a decent chunk of the Qs, and tech is actually sitting below the 50% mark of this most recent range, right? So why is it, again, that the Qs are all the way up there? So I'm not saying that this is a fully bearish thing. Of course, we just have to trade price and what price action is doing, but it's something to consider. I know it was pretty bullish in that broad market analysis, but just take this with a grain of salt here as well. But what is interesting about Netflix is that we're moving out of a balance area. We talked so much about this, and it's happening again and again in the marketplace. We have an area of long-term balance here, and we're starting to form another balance area on top. If we can break out above this area, I think the market sees here a lot of excess in Netflix, where we come to at least fill this gap above at 518.21. 518.75 to 521, excuse me, and then potentially higher into that 537. That's if, of course, we can take out these highs up here. We mentioned that we've been pretty bearish on Netflix for quite a while, so I think the most bearish case here for Netflix is if it fails back down into this range. Of course, we first target the lows in here, but with all of these touches, that's destined to fail. I think we come back down here to our next sort of major support at 467, and then the rest is history. I've talked about it for so long. Anything underneath that 467, look at that area, right? Touches. If that fails, it's goodbye Netflix, at least to the 200 SMA at 456. That's actually a really conservative target, but really this 427.82 is on my mind. I've been saying that for so long, and I'm just really waiting for Netflix to do something, right? Just do something. Doesn't matter what, just do something. Next up, Tesla. So here, in my opinion, is the culprit and why the Qs are trading at all-time highs as opposed to sort of being like the rest of our tech companies and hanging out around 50% of their, consolidation range. And obviously, the picture is just so much different here. Huge move up on the S&P inclusion news. We've talked about that, so let's just apply some levels here and give you something to trade off of this upcoming week. Clearly a pressure cooker top there at this 598.86, excuse me. If we can clear that at least to the all-time high here at 607.80, if not higher into, I would say, like 625, 650 would make a target. These real large round numbers that people are sort of waiting for here on Tesla are the areas that you want to be on the lookout for. If we pull back, though, we do have some areas of support to consider. Definitely Thursday and Friday. We're holding on to this level here at 583. I'd round that up to like 585 as well. You can see Friday's wick is slightly higher. And then there's a gap in the chart below us as well, right? So that gap fills underneath the 583.69 down to 570.75 just about. So a large gap in the chart here that remains unfilled. If that fails and that gap does not hold, it's back down to this low right here, the low of that hammer candle. Let's put a value to that. That is going to be around 541.30. And the rest is history after that. I think it's a pullback to our prior all-time high if that one fails. But based on the chart pattern here, right, I want to keep things in perspective. We do have a bull flag consolidation starting. I think Tesla could easily chop around in this range for some time before making a move out of it. One thing I do want to point out is if we scrunch up the chart a little bit and look at the last major break Tesla had, which of course is down here in the lower left of your screen, we see the break, and then what did we do? We consolidated sideways in this range for, almost a couple months, 2-3 months before seeing this next break here. So don't think that Tesla, just has to continue in the upward direction just because of this news. It could easily, this could have been the rally. I'm sure it was the rally, and now we could see that consolidation. If you remember, this rally was all based on the fact of the split. What happened after the split? Sideways, nothing. So I wouldn't be surprised if the same thing happens here with the S&P inclusion. So just be on the lookout for that. Alibaba has been a tough one to trade for sure. That cup and handle we talked about in last week's video, something like that, and then boom, fill the gap, obviously did not happen. So now we have a new gap above us. That's this one here. We partially filled it there on Friday, finally trading back above the high of that Monday gap down. But since then, we've failed back down into this range down below. And I think if that, truly is a look above and fail, a failure to fill that gap, the target will be down here at 261.25. And then after that, here at 253.81. If we do fill the gap, of course, we're just going to walk the targets up, right? We have 275 as the gap fill. Above that, resistance at the bottom of our next gap, 280, which fills up here to 290.57. But again, be cautious of that 50 SMA, and that is asking a lot for BABA over the course of a week, right? That's a pretty significant range. I'm not saying it can't do it. We see that it can move in instances like this and in instances like what we saw here, but is it the likely scenario? I'm not particularly convinced. I think, lower here to 261.23, and if that fails, back to our next support at 253 as we talked about, and we'll take it day by day from there. Here on Facebook, we have some trend line drawing to be done. If we just map out something like this, boom, there's our support trend line, and here is our resistance trend line, something of the sort. So we're seeing that we are trending upward inside of the symmetrical triangle, but we haven't had a strong break in either direction yet. So that being said, if we fail back down below support here at 278.82, I'd be looking out for super support down here around 273.12, especially with that inverted hammer on Friday taking back almost 100% of that large breakout move there on Tuesday. That's slightly concerning that the bulls were not able to hold some true strength. So we'll see if they take it lower down to that super support. Anything lower, of course, is the support trend line. It's been it's been acting for quite some time, so I would expect it to be respected there for another bounce higher. If we break out above the resistance trend line, then the targets, you just walk them up. We have 297.41, and then all-time highs after that around 304.67. NVIDIA, nothing has really changed here since we talked about it in the midweek update. We simply had a look below and fail, in which case we targeted the opposite end of this balance range right here. Once again, balance to excess, balance rules apply, all this stuff. I talk about it all the time, and it gives you a framework to trade within. If we get a breakout above this 544.42, then we're looking for a move to come up into our next area. That would be a nice move of excess out of this area of balance, right? So think about that, balance to excess. And then when we get here, what would you expect? Well, another area of balance, something that could look like that, could look like that, a number of different things, but that is the target up there at 573.52, all-time high after that at 589.07. To the downside, if we get a failure though, we're just going back to the bottom of this balance range at 523.88, and then lower into our sort of failure low, right, at 515.43, and then super support as that starts to coincide with the support trend line. But once again, I want to remind you, and I didn't do this on Facebook, but I want to remind you one more time, if we look at the range we've been trading in, and we do something like this, about 50%, slightly higher here in NVIDIA, but why is it that the Qs are so high? Again, it's all based on Tesla. So if Tesla starts to see a deeper pullback, I would be skeptical of the Qs. I just want to sprinkle this stuff in here as we go. Microsoft, same exact thing. If we look at the balance area here, it's really, we've done nothing for a number of weeks since late June, right? And right now what we're seeing is a tight compression of range. If that 50 SMA breaks, especially with this question mark candle, followed by preceded by an inverted hammer and then a hammer, no one knows who's in control here. It's just sideways chop. It's pretty tough to take intraday trades here unless we either get a breakdown of these lows in that 50 SMA, in which case we can target here 210.62, anything underneath slightly lower at 208.72. To the upside though, if these upper wicks start to break, and again, no one's in clear control here, it's just sideways action. If that breaks, just target the highs back here at 218.23. Anything above that, and our next level is at 224.64. But as of now, no conviction. We have sideways action, more sideways action, but the most recent sideways action is actually just smack in the middle of two ranges, right? So Really no conviction here in Microsoft. It's been a tough one to trade. I would stay away unless you either get a clean break of that 50 SMA for lower, or if we go higher, it's pretty tough because there's a lot of resistance in here. But if we can clear, I would say I would just really watch out for this 218.23 to break. If it does, boom, 224.64. Amazon, another culprit of the sideways range, doing absolutely nothing here. But what's most interesting about Amazon is if we do something like this from our highs, excuse me, I drew the wrong trend line there, our high here, do something like this, we're sort of like testing this thing and bubbling just below it as opposed to pulling back really hard and doing something like that. So I like the strength that the bulls are trying to show here by, holding prices kind of just below instead of like this, pulling back in a major way. So if we do get a trend line break here, at least watch for the takeout of those highs there. I'd be looking at the 3300 as a first target above. Anything above that is 3365, and then the top up here. But that's asking quite a lot. Maybe that move is in store with the holidays and shopping sort of in full swing now. But I wouldn't just be playing this one based on news, right? You really need that technical catalyst. To the downside, I'd be watching out for 3,000, and the reason is that's a nice solid whole number, and we also have some prior support around that general area. So look out for that if our support trend line fails, because we have both in play right now, forming a bit of a symmetrical triangle, a nice little wedge here. So if that breaks, 3,000 becomes the target. Anything underneath is 2,900 based on this set of lows in here, as well as prior here. Kicking off the quickfire round with NEO, I think this was sort of the week of reckoning, if you will, for electric vehicles as well as green energy. Probably hurting a lot of people, right? Expecting that this thing would just go up forever. Boom, instead we finally saw that nasty correction that you generally see when you get parabolic moves. So that's why I sort of stay away from these things, because you never really know when the top will form. But anyways, based on what we have here, clear support at our 38.50 mark. If that fails, which we always saw on Wednesday was really a gap fill, a sort of dead cat bounce, if you will. If that fails, 50 SMA is first target, but really it's back down to the 29.38 level. So to see any more upside, we really need to break out over that dead cat bounce high, which is going to be right around $48. If we do see that, then of course maybe look for some slow grind action. I think the volatility here is increased to the downside, but to the upside, maybe some more people will start to be skeptical of buying at these levels, so the grind might start to go higher, something like that, slow and chugging into that 54.16. But for now, based on what's happening in front of us, we do need to clear that dead cat high for any upside and watch out for the 38.50. Checking in on Chewy, one thing to keep in mind with this one is earnings right around the corner. So anything I say here could be blown out of the water if earnings are good or bad, causing a gap up or a gap down. Resistance above at 78.50. That's an all-time high, especially with a green continuation candle here on a manageable pullback, right? So this is the move up, and we saw a manageable pullback like that. Nothing, to be scared about, especially with the green continuation candle. Maybe we see a revisit of that area. If anything higher, it's blue sky levels, whole and half dollars, intraday levels that do form. If earnings, causes a gap down, or maybe we fail back down below the 72.24, look out for next support below at 67. 50 SMA is in between ranges here, but next key support based on price level is at 60.90. JD looks extremely bullish to me for a number of reasons. First one is because we're holding on to the 50 SMA and it's acting as support over and over again, which is generally a bullish thing. Next thing is that up at here at the all-time highs, we did see a huge negative reaction, but from there, we've just gone sideways, and it's not like anything drastic has happened, really breaking through that 50 SMA. So for more upside to be in store, I would expect we need a break of this sort of resistance trend line with these highs in here to retest the 92.77 all-time high. To the downside, if the 50 SMA does break, then we have supports below. This is kind of a choppy level. Let's remove that one. But ultimately, you can see that this is, once again, an area of balance. And if we fail back down into it, the 78.50 mark becomes target. So Intel, my goodness, what a horrific chart on the eyes. Huge gap here from the last two earnings cycles, and a very, very clear resistance trend line that looks something like this. So we are starting to see some rejection there on Friday, especially after a pretty impressive move off of the lows here around 44. So I would be watching for a pullback, based on what we're seeing on the chart. I also think, wow, look at that. Just a thing of beauty, right? So prior support does become resistance, and it was a super resistance here at the 52.70 mark. So definitely looking for some sort of pullback here. Some levels below. Prior support was here at 51. Anything underneath is perfect. Look at that. Lows right in here, as well as the bottom of the gap there at 48.66. So that would be a level below I'd watch for as well. If we get a break of all this resistance and this run continues to the upside, target above is going to be here, next swing high at 56.08, and then of course the gap fill, which is up to here at 60. Let's just round that one off. That is quite a ways away, especially with already coming from an extreme move off of this 44 level. That's asking a lot out of this stock. So I don't necessarily think that that's in store, but you do have the levels to trade off of. So Fastly is one that's also going to be in the weekly newsletter, and the reason being is we started to trade into this gap, this one up here, but most importantly, check out the volume bar down there. Absolutely absurd amount of volume coming in from somewhere, but you'll notice, of course, the large upper wick. So do we trade higher or do we trade lower? It's kind of the question and why it's such a good one to keep on your watch list, right? If we trade higher, of course, just look for the gap fill. We have a couple of areas of contention. First one's around $100, whole psychological number. Next one is this prior high at 117.79, which is really just below that gap fill. So if it starts to fill the gap, look out for a move over 100 to really ride, a very, very, very empty area of the chart up to that 117 mark. But if this upper wick does amount to more selling, watch for a break of this area, the 86 whole dollar, which is the 50 SMA pretty much to the penny. If that fails, back to 76.05 and potentially the lows here at 65.25, this volume is just really interesting and something you should watch. So space is seeing a little bit of a bull flag action, right? Something like this, sort of consolidating up here at the highs. A little bit of a pressure cooker top now at this 29 mark. If we break out higher, you'll see when I scrunch up the chart, there's really just emotional selling and buying, right, on the upside on the left. In this general area of the chart. So very, very little resistance there. I would be watching out for 36.52 if there's a major breakout. I'm not saying that it's going to, again, happen immediately when we get the break, but it could slowly drift and sort of grind up higher, do something like that. But if we get a pullback, I'd be watching out for the 24.34 and anything underneath at 22.31 because the 50 SMA should be catching up with that, by the time, if any downside action does develop, that should be right there too. SBE switchback is another painful one if you were somewhat of a buyer up here, when the hype was high and things were hot, right? Obviously, clearly a move down after that. So there's a few things just like NEO that I want you to pay attention to. First one is sort of the dead cat bounce highs. If we can break out above the 33.05 mark with some true strength, right? Get a close above that level, then maybe, again, we sort of drift higher here. But I think now that people, some people have definitely been hurt by this move to the downside, there's a little bit more skepticism out there. So I think that the move might be slower is what I'm getting at here. If we break down below the sort of double bottom lows here, at Thursday and Friday, which is around 30.40, then we have prior resistance and prior gap fill. It's not really actually that important of an area, but 28.67 maybe because it's these two lows. We'll just leave it on the chart for now, but really it's back down to 25.50. So I'm leaving MU zoomed out for a specific reason, of course. If we look at this, that's nothing more than just a multi-year balance, right? It started way back here in 2018. We're now coming up on 2021, so multi-years worth of balance, and now we're starting to see a clean move above these highs. I'm not saying for day trading, buy up here because it's skyrocketing much higher, but if you're a long-term investor and we start to see a little bit of a manageable pullback, this might be something that you want to get involved in. Let's talk about some levels, though, and what we can do as options traders here. Let's zoom in. So if we do start to see that manageable pullback, we're first looking out for a So because this move is so impressive, I'm just going to throw the Fibonacci's on it to see where a reasonable pullback would be, and that is absolutely a thing of beauty. I mean, you can't make this stuff up. 38.2 just so happens to coincide with prior highs, which is, if you know support and resistance, prior resistance turns into support. So if we do get a move back down there, that is certainly a nice buy point at 64.74. The 50% too coincides with prior highs. Just, wonderful, wonderful stuff. So this is a potential buy area here, in my opinion, for that longer term micron vision. But for day trading, I wouldn't be a buyer of calls up here at the highs, basically, is all I'm trying to say. I'd wait for a reasonable pullback, get a risk-friendly entry, and then try to ride it higher. I wouldn't try to time a pullback either. Salesforce got demolished on earnings, huge gap down here, and we're starting to kind of fill that gap, of course. So anything over the 228 could fill the 236. I'd be watching out for that. Of course, there is this area of resistance, which was support in the past. They're lining up with the 228, so a strong level there. But if we can move above, the gap fill does look likely. Anything above that, probably a resistance trend line as opposed to horizontal levels for now. If we do something like this, you'll notice that that does come into play before we get into this 265.50 sort of area of resistance, this topping area. I'd watch out for the 50 SMA overhead as well. And if down is the direction that we go, then we're looking out for a, I'd be skeptical as we chop around in this range potentially. But if we take out that gap down low at 215.31, I think it could be game over to the 200 SMA, which lines up with a prior high back here. Haven't looked at McDonald's in some time, so let's put some levels on it. We will map out this key area of support. I would actually call it up here, so interesting. What I'm noticing in adjusting and fine-tuning that level is that we had prior area of consolidation, and now we're starting to break down below it. We have two inverted hammers that printed there on Thursday, Friday, and I think if we break down below this secondary sort of area of support, basically the double bottom as well as a number of different touches, then McDonald's could head lower into something that is, more realistic, maybe this double top sort of action back here around 202.27. So we'll look out for that if the 210 fails. If we trade back into this balance range, then we're simply looking to retarget the high of the balance area. The 50 SMA is there as well at 220.18. Anything above, all-time high is probably up here at the 229 area of resistance, just slightly below the 231. So that's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section or by simply giving the video a thumbs up. That being said, we are in blue sky territories. I did talk quite bullishly about the broad market as a whole, but you'll notice, of course, that our companies aren't quite at those same levels. So take that with a grain of salt. Always do your own analysis. It's probably not the best idea to start initiating new longs here at the all-time highs. Usually you wait for a risk-friendly pullback, but that being said, trade as you will in your own sort of risk parameters. And with that, I wish you a green trading week.